Hey there traders, welcome back for episode 102 from the StockBandit.tv. It's a place you can always find trading videos to make you better. Now it's Sunday, it's time to take a look at the major averages and get a big picture view of what's going on out there. We know as traders that's going to influence individual stocks, so that's where our trading week begins. Up first we're going to see the NASDAQ, then we'll move on to the S&P 500 and the Dow. So obviously this market's been on quite a run lately. We carved out some short-term higher lows here recently. We then ran to the top of this channel right here, which I've shown to you here as well. We then broke out and accelerated to the upside from that, which really shows a lot of strength. Also note the return of volume with that, particularly post-Labor Day. So to see this market making such a big move has been great if you're a bull especially. So at the same time though, we had this very major level up here, 2150 for the NASDAQ, that served as some support multiple times during 2008. So we knew that as that is approached from below, that could pose as a very important level, and I've also mentioned that here a number of times. Well, last week we tagged 2150 right on the nose on Tuesday. Wednesday we jumped above it, but we couldn't finish there, and instead we reversed and closed down near the lows of the session, selling off. So we got this big large reversal bar. That also was a bearish engulfing bar. It engulfed Tuesday's range and it finished beneath it, which is bearish, so bearish engulfing, and that obviously paved the way for some follow through on the downside. We did see a spike in volume on Wednesday, which, you know, given the size of the range on Wednesday and the nature of that move, to make a new recovery high and then sell off so hard and finish negative was not a big surprise with that increase in volume. But on Thursday and Friday, volume actually tapered off a little bit. So here's where we are. There's not a real clean-cut level to be eyeing right here. Where obviously we had a short-term rest back here. That's kind of the same area that we've ended last week on. But at the same time, the next low on the chart is right back here, 1958. So we're clearly a long way from there. And for a real change of trend to occur and to be confirmed, we would need that 1958 level broken. We would need a lower low established. So at this point, really all we're looking at is a pullback within an uptrend. So the way that it occurred is not real surprising. The market had gotten very stretched to the upside. It was time for some kind of a pullback, but the dip buyers have been extremely aggressive in this market, and the pullbacks have been very brief. They've been very shallow, and so they've got an opportunity right here to step in and prove, you know, their desire again, once again in this market. So it's going to be very interesting to see this week. If they do not do that, we could see a pretty harsh move to the downside. But, you know, at this point, with volume starting to lighten up a little bit the last couple of days, and with this market only having given back a fraction of this most recent move, it's certainly not time to consider a change of trend just yet. Now, that this may mark a lasting high. I'm certainly not here to tell you otherwise. All I'm trying to say is, as a trader, I've got to consider the conditions, and we are still in an uptrend. We still have higher lows in place. We're still a long way from the previous low, and we've only pulled back for 3 days here, and it's not been a major sell-off here. So it's just time to be very selective out there with the charts, but don't try and make any drastic predictions, because the trend is still up. It's going to take more than a 3-day sell-off to change that. For the S&P 500, 1039 was resistance back here several weeks ago. It's now starting to act as some support as this market pulls back to that same area. We bottomed out on Friday at 1041. Now that level could still get broken to the downside this next week, but given that we've sold off here on below average volume in the S&P, and we've pulled back to an area of prior resistance that's now serving as support, it's going to be interesting to see if this 1039 area is able to hold in the days ahead, because I'm sure that I'm not the only trader taking a look at that level. We did see a failure of this 1074 breakout here, but again, that may simply be a temporary thing. We'll see what takes place. For the Dow, former resistance right around here, 96.30, and so we pulled back and got within, I think, 11 points of that on Friday. So that's an important area. We did see this index kind of really struggle to get well through this 9800 area. 9850 was kind of the short-term resistance right here. We actually barely cleared 9900 briefly on Wednesday, but then of course sold off quickly. So you know, we've got a couple of key levels here to the upside, 9850, and then of course 9920. I believe 99.17 is the high there, so 99.20 is what I'd be looking at on the top side, just a new high. But same situation here. The trend is still up. We've had a 3-day pullback to a former key level, and it's also come on weak volume. So it's certainly not yet time to consider this as a trend change for the overall market. But it's going to be very interesting, and it's nice to see this market get shaken up a little bit. It's going to really start producing a whole lot more charts for us as traders. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.